Welcome to Bruce Hurwitz Presents Meet the Experts. I'm your host, Bruce Hurwitz of Hurwitz Strategic Staffing. You can find us on the web at hsstaffing.com. I hope you'll consider us for all your staffing, career counseling, and professional writing needs. I'm delighted to be joined today by Robert Klausner, CPA. We will be discussing the 2021 tax preparations. Today's program is brought to you by marketing guru Gil Efron. Stop wasting your marketing dollars. When it comes to creating effective marketing and advertising campaigns, people often rely on what they personally like or what they hope their audience likes. Gil Efron's How to Think, Plan, and Write Like a Madison Avenue Marketing Pro coaching and training program improves results. No more guessing, no more opinions. You get it right the first time. Contact him today at gil@gilefron.com or call him at 914-414-9245. Rob, welcome to the show.
Thank you, Bruce. Well, good to be here.
It's my pleasure. Please take a moment and introduce yourself to our viewers.
My name is Robert Klausner. I'm a CPA here in Parsippany, New Jersey. I'm the tax partner of firm P&K CPAs. We have a staff of 10, and we are a mid-sized firm that we have clients worldwide, and we have a special niche that we deal in on the audit side. We do a lot of 401k audits and not-for-profits. And on the tax side, we have actually a wide variety. We have everything from small businesses to multi-million dollar entities. So we work very closely with our clients throughout the year, unlike some of the larger firms, which put you on a schedule and don't really, they run the clock every time you call. We're a little bit different in our fee structuring and how we do it. So this way people feel comfortable calling us throughout the year, and we're not just here just for April.
Well, I thank you for that. Again, I'm delighted you're on, and I'm going to share for a few moments a slide you provided with the topics that we're going to be touching upon. And I want to get one thing out of the way from the very beginning, and that's cryptocurrencies, because I don't understand them. I don't pretend to understand them. And I was surprised that you included this as a topic. So what are cryptocurrencies? What do we need to know about them? Because every time I hear cryptocurrencies, I think of criminal activities. So
crypto is a made-up thing, at least in my opinion. I'll tell you, they are not backed by anything, unlike the U.S. dollar that is backed by the U.S. government. Bitcoin is obviously the most popular and most well-known. It has been run but like some of the other stocks that are called meme stocks, they run on rumor and innuendo, and they are being run up as another type of stock or equity. And so there are a number of them. You'll see there's a slide in there as well that shows like the top 10, Bitcoin being well above everybody else, but they are treated as a security at this point. And if you are mining, which is the word that they use, Bitcoin, and there's something that's I can't say that we specialize in this at all. We've been dabbling in it because we have some clients that are now working with it, but it is treated as a security. And if you do buy it and sell it, it will be treated as such, and you will have a gain or loss on sale.
That's enough for cryptocurrencies. All right, let's get to, more realistic, more normal topics. PPP, the Paycheck Protection Program.
So this is
what's new.
Go ahead. I'm sorry.
No, what's new? What do we need to know for 2021?
So at this point, we're in round 2. So this was the big deal that came out last spring. The government offered up small businesses money to help keep your employees on. And so they offered a lot of people, you've heard, there's been in the news, there was people that filed fraud fraudulently to get this money, because it was to be, if it was used for initially it started out to be used for primarily payroll. It was going to be 80%, 75% payroll, and then 25% was left for other business expenses such as rent and healthcare and supplies. They then expanded very quickly, within weeks, expanded it to 60% payroll, and expanded the expenses to cover other things to make it more reasonable. And what was originally an 8-week use of the money became 24 weeks. And if you use the money properly, you filed your application for forgiveness at the end, and then they said if everything was in order, they forgave the money and you owed nothing and you had free money. So they did it twice, and they came around again this spring and offered it up again for companies either that missed the first round or even wanted a second round. And there was some specific qualifications that the companies had to show. That they had to show that they had a loss in 2020 against 19 in a specific quarter to show that you had a decline in gross revenues. And then they gave you the money, and same transaction. You had 24 weeks to use the money, and there was a certain calculation you had to use based on the number of employees and the payroll you were paying. And they gave you, it was calculated at 2.5 months worth of those numbers. And they gave you that money. And again, and now we're coming up at the end of the end of the first program, because you had 24 weeks to use the money, and then you had 10 months to apply for forgiveness. So the first round in 2020 just expired in September, October of this year, would have been the 10 months. The round 2, which came off this spring, everybody's much more now was used to it. The banks got better at the application. So people used the 24 weeks, they used the money, they put up the application for forgiveness already, and we're into the round of forgiveness now for the round 2.
The basic condition for being eligible was minimum number of employees.
So you had to have, it was only, the Paycheck Protection Program was only available for actually everybody, any kind of entity that had employees, that had payroll. And so it could have one payroll, you just had to, and if you were an owner, there was a limit of 20,677 that they were allowed to take, because you would annualize the income. So if they're over 100,000, you can't say, oh yeah, I'm the owner, I'm making $250,000. They're not going to give you that. So they capped the owners, any owners at 100,000 annual income, and then you were allotted 2.5 months of that.
Okay, let's move on to the next topic: the New Jersey and New York State business alternative income tax.
So this was something that New Jersey came in last year. They actually put it in place in 19, but they never activated it. They didn't get it in place until the December of 19. And so there was one quarter or one payment that could be made. So this is a workaround for the $10,000 cap on state and local tax deduction on your 1040. So a little recap is, so on your 1040s, one of your itemized deductions is your state and local taxes and your real estate taxes. President Trump, when he made the changes back in 2018, put a cap on that of $10,000. Now that works for people in Iowa, it doesn't work for people in the Northeast. We have the highest real estate taxes in the country. So most people's real estate taxes are over $10,000 by itself without your state and local taxes. So people were losing a lot of those deductions. So a lot of the states have been coming out in the last year with these workarounds. So if you are a member of a pass-through entity, either a partnership, an LLC, or an S corporation, you can make this election, and it's done annually. It could be on one year and off another, but it's done annually. And you are basically estimating your K1 income, which is your flow-through income from that entity. And there is a percentage. So for New Jersey, it is under 2 million. It's for 5.65% of your K1 income. So it's not going to cover other income on your tax return, but it'll cover this. It's supposed to cover the tax on your K1 income. So if you're, for instance, if you make if your K1 is going to make $100,000, you'd be able to pay in the $5,600 and change over by the entity, deduct that from the entity to lower your K1 income, and then it passes through the $5,600 to your personal to your K1 for your personal tax return as a credit on your New Jersey tax return. So it is this way it's allowing you to deduct the taxes and get the and take the credit for it. So it was a win-win. A lot of the states have come out with it. Connecticut came out with it. New Jersey came out with it, like I said, in late 19. New York just instituted it in 21.
And this relates to the property tax as well?
Well, no. So you can't. It's only because the cap is on your state and local taxes on your 1040. They're combined with your state and local tax, so your New Jersey tax and your real estate taxes are one item of deduction that is capped at $10,000. So now they're giving you a way to at least take the state and local piece and take a deduction for it if you're a member of a pass-through entity.
But the federal government, that was one of the things that they ran on, that they were going to get rid of the SALT.
Well, the president, yes, the current president now. But so Trump took it away. Trump put the cap on. And
Biden said he was going to give it back, but that hasn't happened.
But it has not happened yet. No tax bill has been passed or presented yet. They just passed, as everybody knows, the infrastructure bill this week, but they haven't passed any kind of tax legislation, and I don't see it happening. It's up there. It is on there for them to not lift it completely, but raise it. I believe they were going to raise the cap back, take it to 30,000, I think, or 20 or 30,000. But that's not going to really do much for people, but I don't see them getting it through personally.
Move on. Retirement.
Okay.
What's new? What do we have to know? Is now the time to make some deposits?
Yeah. So there's definitely, so in 2020, the government had waived for people over 70 that had started taking RMDs, required minimum distributions. For 2020, they said they waived it. They said you don't have to take them this year because everything's so bad. We're not going to force you to take it if you don't want to. You can if you wish, but you don't have to. They did not waive it in 2021. So RMDs have returned for 2021. The age for requirement is now 72. It was 70 and a half prior to 21. So now if you turn 72, you have to take, if you turn 72 in 21, you have until April to take your RMD. But if you delay it till April, you're going to have to double up in 22. So that is something that should be done. Other than that, there's been no other changes. The 401k employees who participate in 401ks, 403bs, the max is $19,500 if you're under 50. There's a $6,500 catch up if you're over 50. They've gone up. These have gone up for inflation. The other things, IRA contributions are still $6,000. If you're over 50, it's $7,000. Those haven't really changed. And then the phase outs and stuff are who can make those.
And if it's a Roth IRA,
Roth IRA and traditional IRA have the same rules and regulations as far as the income limitations and the amount you can contribute.
Understood. Which leads us to tax brackets and standard deduction adjustments. What changes are there?
So the tax brackets have gone up slightly. Nothing. They haven't changed. Like I said, since there was no tax act presented by the Biden administration as of yet, everything that was in 20 is in 21, modified for slight inflation. So the top bracket is still 37% for individuals, and the standard deduction is increasing from 24,800 for married joint to 25,001 for in 2021. It goes up a couple $100 here and there. That's about it.
So that's what cost of living calculation.
Yeah, very minor. It goes up. That's how they have it set to go up a few $100, $100 to anywhere from For single, it only went up $150 from $12,400 to $12,550, and now for and the married joint, they feel it's a little bit more, so it went up $300. It's not usually a big deal.
But going back to my previous life as a fundraiser, I'm always interested in gift and estate tax. So what's new in that regard?
So again, at the moment, there's been no change. The annual gift exclusion is $15,000, which means any individual can gift any other individual up to $15,000 if it's in cash or check, but not in tangible goods without reporting it. So like a married couple can give each child, can elect gift splitting and give each child or person $30,000 jointly. That hasn't changed. The lifetime exclusion, however, went up to 11.7 million. So those who wish to get that out of the way, I'll be happy to provide my children's social security numbers because that will change. I believe that one of the things that President Biden will push through is the lowering of the lifetime exclusion. Right now, obviously, most of the country does not have $11.7 million to give away. So it only benefits the rich people. That is one of the things that is on the table to reduce back to probably the $5 million mark as it was back in the Obama days.
At the end of the show, I'll put up your contact information so people can contact you directly to get your kids' social security numbers. Not a problem. And I'm not trying to be funny now. What if they wanted to make the gift using crypto?
So you can certainly, but it would have to be filed on a gift tax return of Form 709, which is and it would be recorded at the fair market value on the date of the gift. So as we've seen, crypto moves quite quickly. Bitcoin was over 65,000 a few weeks ago. It's under 60,000 today. So if you gifted them a few weeks ago, now you're getting zapped for the gifter is reporting $65,000 for one Bitcoin, and there's no tax on a gift to the recipient, but the lifetime is, if you're over 15,000, the lifetime exclusion that I mentioned earlier of 11.7, a credit is taken against that, and that carries forward throughout your lifetime through all your gifting. So at the end of when you pass, they ask for all your gift tax returns, and it should have a cumulative number of taxable gifts that you've used. So all the attorneys right now are very busy this year at these couple of months doing trusts and estate, doing all kinds of trusts to use up that 11.7 million for all the rich people, because if he changes it back to 5 million, if it's already been used, they can't change it.
Now,
there's a big rush on right now.
All right. Now, why don't you get out your crystal ball and tell us what the possible tax proposals are.
So there's a lot of things that are on the table and that people have talked about. You can hear a lot of things, but what would actually get through is anybody's game, but it doesn't appear like he's going to get much through. As I mentioned earlier, there's a proposal. They want to raise the state and local tax cap from 10,000. I've seen it as high as 80,000. Not many people have that high of a deduction, except rich people. They want to extend the child tax credit through 2022 and make it refundable. Okay, that one would be helpful to some lower income housing lower income house people. Absolutely. The capital gains rate, they were talking about raising it. So right now it is long-term capital gains are taxed at 21% for federal purposes. And they were talking about increasing that to for higher incomes. Again, if you have gains over a certain level. And there's been different levels. Some said $10 million, some said $5 million. So you don't know which it would be. They also want to raise the regular tax rates from, as I said before, the top rate right now is 37%. He wants to push it back to 39.6% for people earning over $1 million. So there's a lot of things on there. He wants to raise the corporate tax from Trump lowered it, made it a flat 21%. He wants to raise it back to 28%. There were a lot of other little things that have been on the books, but that have been talked about, but I don't think they're going to get implemented, honestly. So it's not worth mentioning.
So let's discuss what I'm always fascinated by, and it's not just in your case for taxes and finances, but anybody in business, you have to plan for the future. So talk to us about tax planning.
So you want to obviously, since there was no plan put forth, no changes put forth this year, the standard planning right now, people want to go back and look at their year, see what transactions occurred. I often get calls with people. I've been emailing clients now to say, hey, let's do some year-end planning. And the ones that have had, yes, oh, Rob, I was about to email you, yes, sir. They had others say no, no, no. And then they come February, they go back and review their year and find that back in February, they had this big transaction. They exercised some stock options and they have a $5 million gain. And what can I do about it? And at that point, you can pay 21% and next time take my call. And, you know, I tell everybody, you have to look at things ahead of time before, you know, because after the year ends, there's very little that can be done. So if we look at things, I've been doing projections since October 15th ended. We've been doing projection work and looking at people to see what makes sense. Do they have big gains this year? Can we set up institute a retirement plan in their small business to save some money if they have extra cash? There's a lot of different things that can be done if you step up and ask the question.
What's the best way for a client to present you with their financial information?
So we send out tax organizers every year, and our tax program usually we get it opened up around in January, so by the second week of January, and we mail out or email out secure file portal we use for our clients, because we don't email anything with sensitive information. But we do use a tax organizer, which helps guide them through. It shows all their prior year information so they know what to look for. And as you get stuff in the mail, some people get it as early. I was told by somebody else, oh, they got a dividend check from Verizon that they hold the security and they get the checks directly. And they got on the bottom was the 1099 already, because that was the last dividend check of the year. So some companies do that. So I said, just take that stuff and put it in a folder, mark it tax, and so this way you have it, as you don't have to scramble for it. And same thing comes starting January, usually by end of January into February is when you're going to get all your tax documents. Some you have to go online and get yourself, depending on like with unemployment 1099s and things of that nature. A lot of people don't know, oh, they didn't send it to me. No, you have to go get it yourself. The states aren't that ambitious to mail it out anymore. So they give you a link and tell you log in and you can find it. Same thing with your brokerage. A lot of times I tell them if there's a lot of transactions to wait. If they give me the first one that's marked, that's dated February 2nd, 9 times out of 10, the brokerage house is going to amend it. I said, I always advise them to wait, don't rush to file, because they're going to file an amendment, because there's always something that happens. They have a date that the IRS sets for them to get the 1099s out, and they are often not ready. So they will send them out and then amend them afterwards.
Which makes your life easy.
Yes.
Now, you also have to have that form for your health insurance.
So yes, there's a form that if you have health insurance, you are supposed to, for New Jersey, still has a penalty, or if you don't have health insurance. The Fed, it was taken away and it has not been reinstituted. So, but you still need your form 1095, and it will be either an A, B, or C, depending on how you get your health insurance. But you will need to provide that as proof of health insurance for the full year to, if you live in New Jersey, certainly if you live in New Jersey.
Is it the same for New York?
It is not. No, it is a New Jersey thing that that Governor Murphy still left that tax. It's like a $695 tax if you didn't have health insurance for the year.
I understand.
And some people felt some people do this, it's a financial choice. If I pay health insurance, it's going to cost me $2,000 or $3,000, and he's going to charge me $700. and I'll pay for it. And if I feel I'm healthy, and I will come out ahead still.
So you roll the dice. All right.
For some people, it's not a choice.
I'm going to put up your contact information as promised. And my final question is there anything that I didn't ask you which you wish I had asked you? And if I had asked you, what would you have said?
Well, we go through this, Bruce. I think the questions that aren't asked is always the hardest question. So if, I think people just have to look at and decide what. Some people don't call their advisors because they're afraid to get charged or that they're going to pay additional fees. The planning, if you have an advisor that will help you and they save you a lot of money, it's worthwhile. There was credits available for certain industries this year that we went out and we applied for credits for a client. She got this year so far over $30,000 back from the IRS in credits. We billed her a nominal amount because it was an easy thing. We were already doing the work, so there was an additional fee, but it was nominal, and she was tickled to death that we did it. That obviously that she was able to get all these credits legally, and that's how it works. So the question, it's always worth it. Have a conversation, talk to your advisor. Don't be afraid to make the call.
It's funny, I was laughing because I was reminded of the time when I was working for a nonprofit and I walked in and the president was sitting with the board chair and they were going over financials. And my first shock was a nursing home, was how much we paid for pharmaceuticals. Tens of millions of dollars. The majority, usually, the biggest line item is salary. For a nursing home, it's medication. But they said, yeah, and then every time we call the lawyer, he charges us. And I said, well, I call him, and I don't see anything here about when I call him and ask a question. And they said, wait a minute, you're calling him up and asking questions? Yeah. He's not charging us? Apparently not. My name doesn't appear anywhere. So I called him afterwards and asked him, and he said, yeah, you don't aggravate me, so I don't charge you.
I mean, it all depends. There obviously a lot of lawyers do that. A lot of that they're known for that they charge for emails and phone calls. A lot of large accounting firms do that too. We're not that type. We're here to help our clients, and we try and keep to it. If there's something that's going to be billed, we'll let you know.
I remember when recruiters would charge for faxes.
All right.
I was about to say who uses fax anymore, but I see you have a fax number. So
yes, no, we there is still something, because honestly that's the easiest way to send stuff to into the IRS these days, because you can't get through. They don't read mail, so at least if you send a fax, they do have in some certain cases you can fax things. The state has gotten better where you can now upload responses to notices and things instead of mailing. You spend a fortune on certified mail because if you don't send it certified, they'll never read it, and they just don't open them. They're about 6 months behind in opening mail.
Good to know. Rob, thank you very much. You've provided a wealth of information, and I know everybody appreciates it.
Thank you, Bruce. I appreciate it.
I'm Bruce Hurwitz. Thank you for watching. And as always, please stay focused on success.